Hello everyone and welcome to Day Trader S&P 500. It is November 26th, day before Thanksgiving 2026. This is Dale Woodson, editor of Woodson Wave Report and the YouTube channel. I want to get you guys all caught up. Speaking of Thanksgiving, we're giving thanks. I'm giving thanks to you, our YouTube subscribers, by giving you a special limited time offer. Okay, if you go to our webpage and you click on order here, you get register, you come to the register page and you see all of our services there. The triggers and targets are a lot of people are going to them, but our most popular is that monthly subscription where I publish reports every day, sometimes more than once a day. Okay, so you register here, and then the special offer for the YouTube people who are watching is discount code of thanks. If I can spell it. There we go. Thanks. It's normally $144. Hit apply and you get 44 off, and it's $100 total for the first month. It is a recurring subscription and it's for the first month. So you get $44 off. That's our way of giving you thanks for being YouTube subscribers. Okay, I want to get into a few different things here. Let's start with a really longer term count. We're looking at a monthly chart of the S&P 500 from the 2009 low. You can see that was a 58% drop from 2007. We've got a 1 up, a primary degree, a 2 down, a 3 up, and then we have expanding triangle, higher highs, lower lows, which marks the low of wave 4, and then wave 5 subdivides 1 intermediate, 2 intermediate down, 3 intermediate up, 4 down. I want to point out that low was 48.35. That was back in April, and the 50% retracement was 48.32. So it came within 3 points of a direct hit, but more importantly, it held above the wave 1 high of 48.18. You can see right there. So that kept the bull count going. And in this long-term count, it's the same on weekly. This is monthly. Our target where 5 equals 1 is 74.52. That's the long range. That's monthly. That's about as long as we go. We get the same on the weekly because we're using the same wave counts, if you will. Okay, so that's the bigger picture. We've been focused on the short term for quite a long time. Just wanted to stretch out and give you guys that monthly look. And let's go with the ES on a daily chart. Here we go. From that April low, we have a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up. 5 didn't quite meet exact, but it was within 26 points of a direct hit of our target. But interesting here, and I think I showed you guys this before, if we look at just wave 5, we have a ABC correction, and it's right near the 618. Okay, C equaled A right at the 500, and the 618 at 65.12 and a quarter, and this low was 65.25. Okay, so you can see there we might have just corrected the 5th wave up. We'll see. These are longer term counts. This obviously isn't as long as the monthly or weekly. This is the daily. I want to get into the ES hourly. Here we go. We're talking about counting the waves up. Okay, by the way, by anybody's interpretation, the wave count is hard to figure out. But again, when it's hard, you just go with total waves. Don't worry about overlaps. Don't worry about just total waves. And so far, from this most recent low, we've got 9 waves, and I got it in the report there. Okay, from that November 21st, that's 9. Okay, 9 is impulsive. Let me tie that in with our newsletter here, if I can bring that up. That is, come on Dale, there we go. Okay, the market close report from today. There's our auto trade systems. Like I said, everybody's going to that. It's doing quite well. I'll repeat again, you need to have a trading system. I use Fibonacci and Elliott Waves. You can use whatever you want, just have one. And more importantly is a money management strategy. You need to have one. I use the Ryan Jones fixed ratio money management system. Limits the losses to 5%, builds on the gains. Okay, and if trading system is important and money management is more important, the most important is to have discipline to stay within the system. It's not easy, but you got to have discipline. Okay, there's the contact information for the auto trades and testimonial, disclaimer. That's all. All right, here's those same 9 waves up. Okay, we were talking about counting the waves on the last report and the last video, and there we go. I'll just read you some of this stuff I wrote, and I said it in the last report. I don't like to make expanded flats my primary wave count because they usually don't work out, and this one, as expected, didn't work out, of course. Okay, and the C wave ends up being impulsive wave. Okay, and it's up in the opposite direction if you're counting on an expanded flat and a continuation to the downtrend. Okay, so if it sports 5, 9, 13, 17 waves up, you see the 9 here. All right, it's impulsive and the direction is up. Okay, and today's high counts as 9 up. Okay, at this point it would take another wave down for 10 and up for 11 to be a corrective wave structure. Okay, so I think I left that out of this report, but impulse is 5, 9, 13, and 17. Then correction is 3, 7, 11 on up to infinity, just like the impulse is 5, 9, 13, 17. So if we get a 10 down and 11 up and then it starts collapsing, then that revives the bearish count. Okay, but for now it's 9, and we'll see what the next few days bring with the shortened holiday and all that kind of stuff. Okay, it still could go 9 to 13 or 17. We got to just keep watching it and keep counting. That's the way to do it. But for now, it would take another wave down for 10 and a wave up for 11. That would be corrective. Okay, and that would have to be followed by a move below that low, which is 321 points away. That low right there. Okay, and again, it could go from 9 to 13 to 17, or it could just go to 11 in reverse. And we'll just have to watch it play out, and we're going to keep counting it on the short term. Okay, this Fibonacci spiral here, it's been catching alternating highs and lows from the all-time high. Okay, and the next date in the sequence is December 2nd. Okay, and that's it should, if it keeps alternating, it should mark a high. Okay, and what's interesting about that is that it's just a week away. It's only 7 calendar days away. Here, it's right here, a week away from today, and only 3 full trading days with the holidays. Okay, by the way, happy Thanksgiving again, everyone. Okay, so we'll watch that. Maybe the high of this move ends up on the December 2nd, and then it reverses course. We'll see. Okay, we still have a 2 up there that needs to be surpassed to break the bearish count. I mean, it just got broken at the 4th and 3rd degrees of trend. Okay, there's the steps we needed to see. We got them for the first 2 degrees. Okay, and we got that one there. All right, there's where we moved on the 14th to a short position in the short term, but we still haven't moved off the intermediate term long, which is against that April low, and we still haven't moved off the long-term long position, which is back October of 2022 low. That would take some doings, but we'll see what happens. And I wanted to show you guys this Fibonacci time spiral from that May 23rd low of this year. It has marked lows with a slippage of 1 to 3 days all through the sequence, and the next day that it shows in the sequence is January 11th. So we'll see where that goes. We'll see first if the time spiral pops for this, for this high here, and to see what happens after that. All right, so where that high goes is going to be important as long as those previous second wave highs hold. There's still hope for the bears, and the bulls hopefully have profited from this, because that's a pretty good move. 300 and something points, from that last low. It broke through 2 previous highs, so we'll see. It's got 2 more to go. Okay, I don't know if we'll get another one in before next week with the holidays here, with Thanksgiving tomorrow, but we'll update you guys as soon as we can. Thanks again for watching. Hope you guys take advantage of that special limited time offer on the subscription. Happy Thanksgiving and take care, everyone.